right, let's jump into it. ATHA Energy. When I'm talking about ATHA Energy today, really I'm going to be talking about three companies. I'm going to be talking about ATHA Energy, I'm going to be talking about 92 Energy, and I'm going to be talking about LUR because we're right in the middle of a three-way transaction that was announced in early December of 2023. From an LUR perspective, the vote closed 2 days ago. Court hearing today was approved. So transactions are progressing and proceeding, looking to be fully closed by the first week, start of April, with 92E following on that transaction. So on a pro forma basis, we'll talk about the buildup of assets. We'll talk about our exploration plans in 2024. And what ATHA represents by combining these three companies. And really, on a pro forma basis, you look at the buildup of the assets across the entirety of an exploration risk curve, and it's looking at exploration torque. It's looking at exploration torque from a significantly large greenfields exploration portfolio across predominantly the Athabasca Basin and the Theon Basin. We have post-discovery projects that comes off of the acquisition of 92 Energy with the Gemini project in the GMZ zone. And it also comes off of resources in the ground. The Angelac project, or the Lac 50 resource that came with the LUR transaction, that's a historic resource of 43.3 million pounds at 0.69% U3O8. And important with the strategy, with an exploration at scale strategy and exploring across the entirety of an exploration risk curve, that needs to come with a strong balance sheet and strong access to capital and a strong capital markets team. So on a pro forma basis, ATHA as an entity at the time of the acquisition had about $65 million on the balance sheet to be able to execute an exploration strategy across the board. Looking at kind of the value to shareholders or the value to shareholders across the board from ATHA to 92 Energy to LUR. I think the strong support on the vote by LUR shareholders earlier this week at 99.6%, I think, in favor of the acquisition showed that they recognize and understand the value of the joint co and of the merged co. But I'll step back and talk about it from ATHA's perspective and the evaluation criteria that led into the three-way transaction and acquisition. So on a foundational basis, ATHA was a company that was listed last year, listed in 2023, April 11th, I believe, off the back of a significant greenfields land position in the Athabasca Basin, about 3.4 million acres, with a very strong capital markets team and a very strong balance sheet. We set to work through the course of 2023, maturing that asset base. We commenced and kicked off, I believe, the largest ever multi-platform EM survey conducted across the basin, completed about 2.1 million acres of geophysical work across the majority of our land position. But with that, we view ATHA as a growth platform in the uranium space. And that growth comes in really three different ways. It comes through investing in our assets. It comes through exposure to NextGen Energy and to a degree ISO Energy's exploration programs through a 10% carried interest. And it also comes through merger and acquisition activity. And the merger and acquisition activity in ATHA as a growth platform for M&A, what our evaluation criteria were focused on was maturing our asset base. So a significant greenfields exploration package in what I believe is the best uranium jurisdiction in the world. That's the Athabasca Basin, looking to move to the right in terms of maturation of our asset base. 92 Energy represents that. 92 Energy had discovered previously a basement-hosted corridor on the very eastern edge of the Athabasca Basin, and then Latitude uranium, principally with the Angelac deposit. That's a 43 million pound deposit in Nunavut that is one of the highest grade resources outside of the Athabasca Basin. And it wasn't just about maturing ourselves along that exploration risk curve and along the asset risk curve. It was also about looking for opportunities that had significant upside potential and significant torque. And we believe that is the case with both the GMZ project in an underexplored, very early days basement-hosted uranium corridor on the eastern edge of the Athabasca Basin, and with the Angelac project in Nunavut. And I'll get into that in more detail in the coming slides. Now, transaction overview, I won't get into a significant amount of detail here. Our acquisition price is at $1, all-share deal. On a pro forma basis, original ATHA shareholders will hold about 46.5% of the company, 24% respectively for LUR and 92 Energy. Now, exploration at scale and a scalable capital markets strategy as well. So this cap table is based off of on a pro forma basis on a dollar acquisition price that ATHA is acquiring both 92E and Latitude for. So on a pro forma basis, about $270 million market cap, again with about $65 million on the balance sheet. Now, with all that said, let's get into the assets. Okay, across the Athabasca Basin. I think everyone here, if you're interested in uranium, you clearly have a background and understand the Athabasca Basin, prolific uranium jurisdiction has been forever. A parallel basin, Paleoproterozoic basin in Nunavut, the Theon Basin, highly underexplored, in our view, significant upside, significant discovery potential that has not been exploited historically within the Theon Basin. We have a significant land position within the Theon. And then the central mineral belt in Labrador that is adjacent to Paladin's Michelin deposit, which is a 120+ million pound deposit. But in addition to that, to be able to explore at scale and to be able to execute an at-scale strategy within the mineral exploration business, you obviously need a foundation of people, and you need good people within your organization to drive that forward and add the value to it. And that comes in two ways. It's we often talk about the technical. I'm a technical guy by background, so one of the things that I appreciate the most is a very strong capital markets team. It's self-evident, I think, within ATHA, the strength of our capital markets team. Over the course of about 14 months, we've raised about $65 million in support of our strategy and our approach to date. So very strong access to capital. From a technical team perspective, I'm a technical guy by background. Corey was up here just before me. He was the chief geologist at Eagle Point. I followed him in there. I came up through Cameco Corporation, was an explorationist, moved over to operations side. After that, had the opportunity to join NextGen in developing the Rook I project from the point of maiden resource right through to feasibility level studies. From there, we just had the opportunity to welcome Cliff Revering to our team. Cliff is a uranium guy, again, Cameco, Orano. He was the chief geologist at Cigar Lake when Cigar Lake went into production. He's a qualified person on a number of resources within the Athabasca Basin. And you go down the list, and the team that we built up has been involved in operated tier 1 assets or been involved in developing tier 1 assets their entire career. And so, a significant technical base and foundation to be able to execute on our strategies moving forward. That's coupled with the technical markets or capital markets team that we have. And then from a board perspective, Siobhan Lancaster, she's the managing director of 92 Energy. She's going to be joining us on our board when the transaction closes. Siobhan has significant M&A experience, coming back through Extract. She was, one of the leads on the Extract deal, which was over a $2 billion transaction in the last cycle. So build up. Look at, think about exploration on an exploration risk curve from greenfields to more advanced stage. And that's a buildup of ATHA, dominant land position across two basins, across the Athabasca Basin and the Theon Basin, over 7.1 million acres of exploration property. Again, carried interest on NextGen Energy's exploration portfolio, which I'll get into in a bit more granularity here in coming slides. Gemini discovery, that is a post-discovery corridor, so a recent discovery on the eastern edge of the Athabasca Basin, and then Angulac. Angulac, again, I'll get into in the next slide here. So stepping back on the evaluation of Angulac, basement-hosted uranium deposit in Nunavut. We view as having significant upside and scalable potential and expansion potential, and a few reasons for that. I've spent the large part of my time in the uranium space advancing and developing underground basement-hosted uranium deposits. I had the opportunity to go into Eagle Point at a point in time when it had been mined for 25 years, had 10,000 drill holes into it. Our team reinterpreted that deposit, and over the course of 2 years added about 50 million pounds to that resource. in turn, then I had an opportunity to join NextGen right at the stage of the maiden resource estimate. That was 200 million pounds, had the opportunity to grow that up to about 336 where it sits today. That being said, we have a team that has a unique view on basement-hosted uranium systems and the ability to expand them. And I look at the targets around here and the expandability of this resource, and I view it as significant. In addition to that, you look at some of the past history. This deposit went from a maiden resource of about 14 million pounds. 1 year of drilling, that resource increased to 27 million pounds. Another year of drilling, it increased to 43 million pounds. So in addition to the geologic targets that exist at LAC 50, you look at the past performance of the resource, and it's on the very steep part of that resource growth curve. And so in 2024, we intend to invest in Angulac. We intend to expand the footprint of the mineralization there. And we also intend to explore outside of the resource itself and leverage some of the low-hanging fruit and existing targets that are on the property itself. From there, then you go into GMZ, the Gemini discovery. When I had the opportunity to go and view the core from GMZ, one of the things that struck me fundamentally was the similarities between the GMZ zone and the Rabbit Lake corridor, both in terms of the alteration, the structure, the style of mineralization. And, really what that leads us to is, our view is that this is a corridor. Okay, this is a structurally controlled uranium corridor that has been underexplored and underdeveloped due to the recentness of it. It was discovered by GMZ or by 92 Energy under 2 years ago. And so the upscale potential here for us comes in two forms. It comes in expanding the known mineralization at GMZ, but also exploring along a corridor as we go further to the north into deeper water metasediments in the lower Wollaston domain. And that's similar, again, like the analogy that I draw is back towards the GMZ zone, back to the Rabbit Lake trend. The Rabbit Lake trend has produced over 200 million pounds of mineralization throughout its history, and the opportunity for us, again, at GMZ is to continue to leverage exploration along a post-discovery corridor on the very eastern edge of the Athabasca Basin. Then that gets us into a significant land position within the Athabasca Basin, and you look at the distribution of ground here, and it's in every past producing, that's on the north rim, current producing the eastern side, emerging production on the south side of the Athabasca Basin. And what we did in 2023 is invest significantly in an exploration at scale approach. We deployed exploration dollars across the entirety of this land package, maturing the properties and using a systematic approach to exploration to find the highest priority targets amongst the largest land position in the Athabasca Basin, with the objective then of ATHA advancing on what we would consider and what will come to the top as the core assets within that portfolio. But then at the same time, given the current state of the uranium market and the number of companies that are seeking interest, you look at opportunities then to generate additional exploration torque and expenditure on these properties through farm-out agreements is something that is also core to our mandate in 2024 and moving forward. The Theon Basin. Theon Basin, we took a first mover position in the Theon, took a dominant land position in the Theon Basin. It is a basin that is analogous to the Athabasca Basin. The Orano has a Kigavik deposit there that on the books has over 120 million pounds of uranium mineralization there. On strike of that, there's two deposits that have already been discovered. It is a fertile corridor. It is a fertile system. What hasn't been tested here is what hasn't been tested in the Theon Basin is the potential for high-grade unconformity associated deposits. The Theon, or pardon me, the Kigavik deposit is outside of the Theon, as are the other two deposits or zones of mineralization along that trend. And maybe I can use the trying to find the pointer here. It's not. The east-northeast trend that you see there going from Kigavik back undercover in the Theon. The point here is that we view the potential in the Theon Basin as being analogous to, let's say, the Athabasca Basin circa 1970, before significant exploration expenditures happened along the eastern edge of the Athabasca Basin post the discovery of Rabbit Lake and Key Lake. And so We view this as one of the significant opportunities in this uranium cycle, and as a function of that, had the opportunity to take a first mover position in the Theon Basin by establishing a significantly dominant land position with over 2.9 million acres of exploration property in the Theon. Now onto a carried interest. Through the history of how the land package came together within ATHA, the individuals that put the land package together were also foundational in two other significant stories in the basin, that being Hathor and the other one being NextGen. And so as a function of that, they also had a 10% carried interest in portions of NextGen Energy's exploration property and two projects within ISOEnergy's exploration portfolio. Now, the slide on the left, or the map on the left there, that's NextGen's SW1, SW2, and SW3. When you look at the dark green overlay, that's the area that we have a carried interest in. That's a carried interest right up to a bankable feasibility stage. At that point, it becomes either a participatory interest or would convert to an NSR at our election. This is at a time when NextGen has signaled that they're returning significantly to exploration over the winter months. I think they've got Dave would know this well as well, but I think they've got a 30,000 meter exploration program planned for this year. Over the course of the winter months, they're drilling proximal to Arrow on a parallel corridor. They've signaled that in the summer months they're going to be having exploration expenditure and drills turning on SW1 over an area that we have a carried interest in, and along the R7 corridor, which is also an area that we have a carried interest in. So it's an option within our asset buildup that we really like. Obviously, NextGen is a world-class operator. So in summary, from an exploration perspective, exploration expenditures across the entirety of an exploration risk curve. So continuing to invest in early stage generative exploration projects, maximizing the opportunity for discovery, investing in post-discovery corridors within the GMZ corridor, and investing in resource expansion and growth within the Angulac project in Nunavut. That's in addition to exposure to NextGen through a carried interest. And so to sum it up, we view ATHA as a growth platform within the uranium space with unmatched exploration exposure and unmatched exploration torque, given the size and scale of the exploration package and given the balance sheet in order to execute work and the technical team that we've built up. But fundamentally, ATHA as a growth platform comes through investing in our assets and maturing our asset base that we've built up. It comes through exposure to a carried interest, and it also comes through continued M&A. We had an opportunity to pull together a three-way transaction based off of the profile of the company that was 3.4 million acres of exploration property across the Athabasca Basin. What we have now in terms of a profile is significantly larger, significantly stronger than we had before, and we intend to continue that growth strategy given the current state of the uranium market, which in my opinion, and I think others share that opinion, is probably the best market we've ever seen. Thank you.